This isn't a company that's running out of money. They're sitting on $140 billion in cash. Hey, Cal here. Appreciate you all joining. If you're a content creator and you're constantly looking for what should I post next, this is the place for you. Well, so my desk flagged this overnight, and honestly, the sheer size of it, that's the story. Amazon went back into the bond market yesterday and raised $25 billion in a single day. 8 different slices of debt, and the maturities, they run from 3 years all the way out to about 40 years. You could see here on the left the story that the desk found for me. That's the one we're going with. And here's the part that tells you how Wall Street kind of feels about it. Investors showed up with $62 billion worth of orders for only $25 billion deal. So Amazon literally had to turn money away. So that's the Bloomberg thinking right there. An AI debt boom? How interesting. And Amazon told the banks running the deal that they don't plan to borrow again for the rest of this year. So that's the number for 2026. That's a lot of borrowing in a single day. All right. So for context, because I don't like to assume things on this show, a bond is just an IOU with rent, essentially. Amazon takes your money now, they pay you interest every year, gives the money back at the end. That's pretty much how it works. Now, why does a company with Amazon's cash flow borrow at all? Because data centers get paid up front, right? The chips, the buildings, the power, the revenue shows up years later. So long-term debt matches the bill to the timeline. And by the way, rich companies, they do this all the time. Like, this is pretty much standard course of business. So Apple ran this exact play back in 2013 timeline, borrowed billions while sitting on the biggest cash pile in the history of the earth because the math simply worked better. So the math is kind of the point, right? So if debt is cheaper than equity for these guys, then this is kind of the move that they would go with. So, and one more thing, right? Because we got to make sure that you understand how it actually applies to you. So before you go thinking it has nothing to do with you at all, if you've got a 401k with a bond fund in it, congratulations. You probably just lent Amazon a couple bucks. This paper, it goes straight into the indexes that your retirement sits in. So here's the number that kind of makes the whole thing, click into place here. Amazon's guiding to about $200 billion worth of capital spending this year. So their operating cash flow, the money the whole machine actually just throws off. So it's around $140 billion, right? So sit with that. That's a lot of coin. You could buy a couple things with that off Amazon.com, right? So this company makes that amount of money, and for this build out, it's still not enough. So their free cash flow basically went to zero this spring. So they're spending all of their income and still borrowing on top of that. That's the size of this bet that they're making in AI. And so this is where I can show you like the actual paperwork. So if you look at it here to my left, like this is the term sheet, the filing with the SEC that went through yesterday. This is a real document. You can go out and find it yourself. Anybody can read it. And what you'll see here is that 6.25% notes due in 2066. So 40 years from now, somebody's grandkids are going to be collecting interest on a data center, which is because it's kind of cool. You think about it like that. So there's the whole ladder, right? 2029 out to 2026, and it sums up to exactly 25 billion bucks. So, and the ratings on this paper, I mean, it's A1, it's double A. That's investment grade. So nobody's nervous. No one on the street's nervous. Like, this is good stuff. So one more number for a scale, just reporting this week puts the big four. So you got Amazon, Microsoft, Alphabet, Meta at more than $700 billion of AI spend this year. Yeah. And they're still talking about the AI bubble. I mean, come on, guys. Combined, that's how much they put together combined. I mean, that is just a ridiculous amount of CapEx. So now real quick, right? Who buys 40-year paper? Because it sounds kind of insane. It's a really long time, right? Like, why would you lock up your money until 2066? That's a long time away. But, in reality, it's mostly pension funds, it's insurance companies. They've got pension checks and annuities to pay out for the next 40 years. So they need assets that will pay out for the next 40 years. So your retirement fund, it wants this stuff. It's relatively safe investments for them. And by the way, this movie has been run plenty of times before in the past, right? Railroads in the 1800s, the electric grid, the fiber optic build out in 19 excuse me, in 1999, if I can get my words out here today. So all of it, financed with paper exactly like this. Some of those bondholders get burned, but the telecom guys got crushed in 2001. But the fiber that they paid for became the internet. So, a little bit of a win for everybody. The infrastructure generally will outlive the investors. I mean, that pretty much happens every time. A lot of times when you see this large capex, it's going into kind of, sustainable infrastructure like data centers, like roads, like railroads, that sort of thing, or the internet. So here's my take. And if you watched yesterday's episode, this is the same story, but like wearing different clothes, right? So yesterday was about how Microsoft cut 4,800 jobs, admitting that the gaming margins were not quite working. And you can check out that episode on my site here. But it's everything, kind of points at the cloud, right? So today, Amazon pricing $25 billion in bonds for the same build out. So the AI race has moved from the income statement really to the balance sheet, and that's pretty significant and important to understand. So companies pay for experiments out of earnings, right? They can quietly stop them anytime. Bonds due in 2066 are a public 40-year commitment. This isn't a company that's running out of money. They're sitting on $140 billion in cash. This is a company deciding that the window won't stay open forever and that the $62 billion order book is Wall Street co-signing that bet. Like when you really think about it, $62 billion of money came in, but they only could do 25 billion. So it's just unbelievable the amount of demand that there was for these. So but let's see carefully, like what you read into that 62 billion, right? Because this is the part everybody I think is going to get wrong today. So bond investors get zero upside if AI wins. Amazon cures cancer with a chatbot. They get their coupon back, right? Amazon, excuse me, that's it. So that 62 billion is betting on exactly one thing, that Amazon survives to 2066. I mean, that's pretty much the bet that's happening. And clearly, a lot of people believe that they will be here in 2066. So the AI referendum happens on the stock, and the stock's been having feelings about this capex all year. And so if you zoom wave, we just take a step back and zoom out with me, because a balance sheet tells you what a company is becoming: heavy, permanent assets, steady cash, a ladder of debt out to forever. So you know what that looks like, a power company. That's the end game. The hyperscalers are essentially turning into utilities. Financially speaking, that's one way that you can look at it. It sounds kind of boring from like a state of business play, but if you look across the market, it's kind of exactly like what's happening, right? So watch three things with me. Who walks up to the bond window next? Because the other three have the same bill company. I mean, everybody's got to invest in AI in one way or another, and how you go about financing that capex. Like that's kind of the interesting, curious part. Amazon's capital spending number at earnings later this month. We'll see what that looks like. That'll tell you how fast this $25 billion moves. Like maybe they already know exactly what they're going to allocate it towards, and that'll be interesting to see. In the day one of these AI bond sales like comes up short on orders, which well, I guess we'll see if that ever happens. That'll certainly be a canary in the coal mine. But that's the day that the music changes. So not the keynotes necessarily, but the order books, and that's truly where the truth is going to reside. So my desk pulled this overnight, right? I had the term sheet looking me dead in the face. It was very, very interesting data. And I had all of this before I had my morning cup of coffee. The product is called Niche. You can use it yourself. It's free to start. Just sign up for a trial. You don't need a card to do it. It's wonderful information. It can get you straight into posting, into creating long form content directly from what it finds overnight that's on your beat. Absolutely try it out. I'll see you guys later.